Thanks for joining us at Silver Stock Investor. Is there value in gold, silver, and precious metals mining stocks? And what's the outlook for silver in the near and medium term? These are going to be the main topics we're going to discuss today with none other than Rick Rule, President and CEO at Sprott US Holdings. Rick, it's always a pleasure speaking with you.
Peter, my pleasure. It's been a while. Lovely to see you in this new incarnation.
That's right. Rick, if you don't mind, let's jump right into it.
Please.
Okay. Given the extraordinary events this year, and I'm going to start with a little quote from Ayn Rand and ask you, do we need to check our premises in terms of what's your outlook for precious metals, given your macro view of the economy and along with fiscal and monetary policies?
Well, checking one's premises frequently is, I believe, one of the keys to investment success. The investment process, the psychology of investing, is pernicious in that if we had the good sense to invest in an area, say silver, when it was out of favor, when it returns to favor and the price of silver goes up, it's odd that our regard for a commodity increases as its price increases and as it becomes less appealing as an investment or a speculation. So what you say in terms of checking your premises, both in terms of what is in favor and what is out of favor, is, I believe, absolutely critical. The second thing, Peter, I love this question, so thank you for it. The second thing is that having a grounding in your premise is what allows you to endure easily the volatility that we've experienced in the last 4 months in precious metal stocks. If you have the perspective that I have, 45 years investing in precious metals, what you learn is that cyclical declines and cyclical advances, for that matter, in secular bull markets happen with the frequency and the ease with which you and I breathe. If you are expecting 15 or 20% volatility, you endure it without very much trauma. In fact, perhaps you use it to exercise purchases on a shopping list, which otherwise seemed too expensive for you. If you haven't checked your premise, if you haven't thought about why you own something and why you believe it might go higher, this very volatility uses you rather than is simply a market actor that you use. So
the smart investor uses that volatility rather than being used and makes it work, obviously, to their advantage. The key is expecting it and being ready for it, and thereupon acting on it.
Well, let me give you a real world example, if I may. I believe personally that precious metals prices are going higher. My premise is as follows. Precious metals move both based on fear and greed. But in my life, the precursor, the thing that has caused them to move, has been fear. And particularly fear in the purchasing power of savings denominated in other forms of instruments, fiat currencies, in particular the US dollar. And I believe that that fear is evident today, and I believe that the fear has good reasons. So I'll enumerate them. The first is quantitative easing, the debasement of the currency. If you and I did it, it would be called counterfeiting. When Parliament or Congress does it, it's called policy, and it's highly, highly popular. The second is debt and deficits, which also debase the currency. In addition, debt and deficits lower the credit quality of the issuers of government bonds. It's important to know that even as the yield falls, the credit quality falls too, which certainly should cause somebody to be concerned should they have the majority of their savings in government bonds. The third factor is, to me, the most important, which is to say negative nominal or negative real interest rates. Interest is the compensation that you as a saver receive for deferring consumption, but it's also protection for you in terms of the time value of money and the credit quality of the issuer. Negative real interest rates are not a construct of nature. They're a construct of Parliament. That's really what they are. They're the outward manifestation of a war on savers by spenders. And in a democracy where spenders always outnumber savers, that war is ongoing and pernicious. So that's my premise. What would cause me to become less bullish on precious metals? Let's re-examine the premise. If in major currency blocks around the world, they ended quantitative easing for 18 months, which is to say they stopped printing specious currency. If in major countries, the debt as a percentage of GDP was less than half of the economic growth rate of GDP in that country for a year, which is to say, if it began to appear that we could grow our way out of debt. Or if interest rates turned positive to the extent of the 20 to 30 year mean, which is to say 200 or 250 basis points of real yield above the depreciation of the currency. To put that in context, the Congressional Budget Office in the United States believes that the US dollar is depreciating at 1.6% per annum. So a 250 basis point real yield then would require sort of a 4 to 4.2 yield, up from 0.8% today. So you see my premise, the three reasons why I believe the fear is valid. And you see that I already have a statistical mechanism in place to check my premise.
So that means you're feeling like your premises are on pretty solid footing.
I do. I don't see very much in the near term, given the popularity of current policies with the voters, to change anything with regards to a policy which seems to be tailor-made to destroy the currency.
Agreed. So with that in mind, and let's just ask the question, what sort of value do you therefore see in gold at this point in time?
Ironically, by traditional valuation metrics, the gold stocks as a whole are cheap. Now, I use different valuation metrics than many analysts do. I don't do very much by way of price earnings, simply because the earning streams of gold mines are finite. They run out. And comparing them with the earning stream of, say, a bakery or a supermarket or a bank is an illusory metric. We do net present value calculations, which is to say that we look at the cash flows that we anticipate occurring over 10 or 12 years. We discount them back at an appropriate rate, and we try to decide if the market capitalization of the company plus its debt, that is the enterprise value, is cheap or expensive relative to the net asset value. The second thing we do is we borrow a technique from the oil and gas industry called the recycle ratio. We look at a management team's historic ability to allocate capital. Can they allocate free cash flow and achieve rate of returns that are similar and competitive to the rates of return that they're enjoying today? And by those metrics, and also by metrics in terms of free cash flow, that is after capital expenditure, relative to other sectors in the economy as expressed by the S&P 500, gold stocks, precious metal stocks generally are cheap. If you compare the fact that they are cheap on a historic basis with the belief, at least our belief, that precious metals prices are likely to go higher rather than lower, no guarantees in life, we find the sector very attractive. We also, in anticipation of your next question, having personally lived through two prior precious metals bull markets, the 1970 to 1981 bull market and the 2000 to 2010 bull market, I note that the gold moves before silver. That's just the way it does. When the momentum in the market is established by gold, then silver moves, and traditionally it's moved further and faster towards the end of the cycle. But the most volatile stocks of all to the upside have been silver stocks, because the population of reasonable quality silver stocks is so small. I'm not talking about the pretenders, XYZ silver, Imagine silver, silver wafer, all that kind of stuff. I'm talking about guys that have deposits of silver that could become economic with focused exploration, or the silver producers. High quality silver stocks, even medium quality silver stocks, are so rare that my friend Doug Casey once observed that when the generalist investor buys into the silver narrative and that generalist money crowds into the silver space, there isn't enough available market cap to house them. He describes the result as attempting to siphon Hoover Dam through a garden hose. A wonderful picture.
Yeah. Um, that's interesting. And if you look at if I just look at what happened in the last bull, people tend to think, oh, okay, silver's volatile. If I really want to make some great returns, I need to take some outsized risks. But I point out that something like Wheaton precious metals, so-called today, between about 2005 and at some point in 2008, was up 10 times.
Correct. Correct. What people forget about precious metals bull markets is, first of all, their duration. Many people, hundreds of people, have emailed me in the last year saying, have I missed the bull market? The prior bull markets of my career lasted 10 or 11 years. So if you assume, like I do, that we entered this bull market in 2017, it's likely we have 6 or 7 years to go. But what people really miss is the dimension of bull markets. The precious metals equities indexes after the recent retreat probably have, I don't know, they're probably up 40% on the year. In the 2000 to 2011 bull market, the metal itself was up sixfold, and the equities outperformed the metal. There's a few lessons here. One is, if you're early on the bull market, don't be afraid to stick tight. But the second is that you don't actually have to take too much risk to outperform the index. You just need to participate in the market. And for many investors, 100% of their participation should be in the highest quality stocks. Let time take care of you. For investors or speculators who are willing to work hard, note I said work hard, then some allocation to speculation is certainly worthwhile. But you do have to be willing to work hard. And you need to allocate the money to speculation that you're willing to lose 50% of. I've seen too many speculators that took outsized risk and wasted a bull market because the company-specific risks, that is failure at the firm level, outweighed the bull market that they would have enjoyed working less hard and buying higher quality companies, which is really tragic.
Yeah, absolutely. So if we look at silver on a relative value basis, relative to gold and maybe even relative to other assets, how would you see that? How would you see it positioned right now?
That's a great question, and it's impossible to answer for a couple of reasons. The most important of which is that most of the silver that's produced in the world isn't produced by silver mines. Exactly. It's produced from scrap recycling and, importantly, as a byproduct of other materials. So trying to anticipate supply is an absolute fool's errand. And in terms of demand, what you learn is that, yes, there is a tremendous increase in industrial demand. Things like solar panels. But the biggest demand is, and always has been, for savings and investment, and particularly in South Asia. India, Bangladesh, Pakistan, Sri Lanka, there is a cultural familiarity with both gold and silver, but because silver's unit value is lower, it becomes a better savings instrument for poor people. And to understand the nature of silver demand, you need to understand more about the economies of South Asia than I do. And so unfortunately, although I've struggled with relative valuations for decades, my track record, like that of every other honest analyst, is unblemished by success. All I can tell you is that silver is more volatile to the upside and more volatile to the downside. And in particular, has a smaller population of companies that one can invest in or speculate in. So in that sense, it's an easier speculation, even without having any certainty with regards to absolute or relative valuations.
With that, are you willing to give us some sort of a forecast for what your expectations are for silver next year?
No. I mean, I'm not being obtuse.
No
I
problem.
just learned it's a fool's errand.
Yep.
People like targets because
Sure.
it's easy to grasp information. It doesn't require them to think, which people hate to do.
Right.
But I've also learned, looking at my own targets and the target of every other worthwhile analyst that I know, that they're useless.
Right.
I'm old enough that I don't indulge in things like that. But what I do believe is that we have 5 or 6 years left in a precious metals bull market. And on the backside of the market, in my experience, silver has outperformed gold. And further, sorry to repeat myself, but I really want to hammer this home for your listeners. The population of decent quality silver stocks is so small that if I'm half right, the rewards could be extravagant. I look back in my career, and it's interesting. In 45 years, I've either invested or speculated in literally hundreds of firms. But most of the difference in terms of my net worth has come down to fewer than 1% of the decisions that I made. And a really odd number of them are concentrated in silver. Does that mean that I know a whole bunch about silver? No, it means that I'm a disciplined investor in a sector that can give you speculative returns. Let's look back to the early part of the decade of the 90s. Silver Standard, 72 cents to 45 bucks. Pan American Silver, 50 cents to 45 bucks. Moving forward a little bit, what is now called Wheaton Precious Metals. I mean, that was through the course of its cycle a 15 bagger in the streaming business. They created, in effect, silver-backed bonds, an absolutely low-risk business that gave one exploration-style returns. Mag Silver, a great discovery. Silvercrest 1 and Silvercrest 2. When you think about a little tiny sector like silver, the idea that it could have given us 10 or 11 10-baggers is astonishing. Will past be prologue? I don't know. But were I a betting man, and I am, I suspect that past is prologue. I don't know how or why anything would have changed.
So Rick, thanks for these views. I really appreciate it. I know that in wrapping up, there's something that you'd like to offer to viewers.
Well, two things actually. We are at Sprott setting up a silver segregated managed account. And if people are interested in having the Sprott organization talk to them about managing their speculative silver portfolios, we would love to do it. In order to encourage the dialogue between precious metals and Sprott, we have a different offer. Absolutely no obligation. Any of your listeners or subscribers who would like our opinion as to their natural resource portfolio can go to a website, sprottusa.com/rankings. Enter your natural resource stocks, please not your cannabis stocks, please not your Canadian chartered banks, your natural resource stocks, and I personally will rank them 1 to 10, 1 being best, 10 being worst. Don't have your feelings hurt. My rankings are very harsh. I will also comment on individual issues where I think that my comments are appropriate. And for those who request it by inserting the word chart in their request, I will include a 50-year chart of the Barron's Gold Mining Index, which is the most inclusive and longest running gold equities index I know. Not for purposes of technical analysis, but rather because it's the best visual aid to understand an anatomy of a precious metals bull market that I know. And I will also include a 100-year commodity chart, looking at the relative valuations between commodities and other sectors of the economy going back 100 years.
That's very generous of your time, which I know is precious and like the metals we're talking about. But I'm sure well worthwhile for anyone who participates.
Well, we've learned a lot from ranking portfolios. We've learned about the things that investors and speculators do well at, and we've learned also what they do poorly at, which has been very useful for us in terms of managing money on behalf of our clients. So everyone benefits in this circumstance.
No question. Rick, it's been a real pleasure, as always. I once again thank you for your time, and I'm sure that viewers are going to enjoy this discussion. Hope to catch up and do this circle back, do this once again sometime soon in the next few months.
I look forward to it at your convenience. I'm working from my home due to COVID, so my time is yours.
Excellent. Thank you so much, Rick. Pleasure.